Well, good evening, all. Ira Epstein, and here we are on Veterans Day. Thanks, all you vets. I really mean that, by the way. And what you want to do now is you want to start looking to see what's going to happen as we have House of Representative members flying in from all over the country, trying to make it back to Washington, D.C. to vote tomorrow. Tomorrow they could be voting on whether they're going to pass the plan that the Senate went with. So that's what you're looking at right now. These are all the Fed members that are due to speak tomorrow. So it's going to be a day where you get a lot of opinion as to what the Fed members are seeing, what they're getting out of their districts, what they're seeing in the economy, because we have been blind for over 40 days with lack of data. I mean, and it's very difficult to try to be a fundamentalist when you don't have the data. You're just guessing at where you're at. Let's just go to the chart action. First off, if you finish up here, you're nearly at new all-time highs. I am a bull going into the end of the year in the stock market. I think I've made that clear here, and I still am. The question for me is, where was the break low going to come? I thought we'd have a weaker September, October than we had. It turned out the cycle stretched from August until later on, and it looks to me like this low might have been the ball game. Certainly this low back here, the end of October, middle of October, fit in. This could have been the recent low. Don't know about that one. I feel much more confident, obviously, with those. Has the trend turned up? In terms of how you use a swing line, which measures, are you making a pattern of higher lows, higher highs, or lower highs, lower lows? No, you haven't done that yet. You still have a downtrend there. You have upside bias since the market is staying over the 18-day moving average of closes. The resistance is back up near the highs at the upper Bollinger Band, and momentum in the market is still pointing up. Confusing. And a lot of risk if you get wrong right here. There's a battle going on in the Nasdaq right at the 18-day average to determine what's the next move here. Is the market going to be able to take this low out, or is the market going to be able to say, nope, that was it, coming down, and it begins another move up? Wouldn't surprise me. I'm going to repeat to get a year-end rally in the stock market. A lot of window dressing, especially after Thanksgiving. As we get into the Dow, pretty much unchanged, as you can see this evening. It had a heck of a rally. This was the standout market today. You were up 600 points or so. It just went crazy. And, of course, where did it go to? Just about the Bollinger Band, and it stopped there. You'll see that magically over and over. This algorithm is designed to keep the market within it 95% of the time. 5% of the time it's going to get out of it, but it generally comes out of it from very narrow. I don't even think I have one here. No, none of these are narrow enough where I can say that you're breaking out. You'll narrow in and go sideways, and that's how you get an idea. This can be one of them. Notice how narrow you are, and you're back and forth, swinging at the swing lines up and down, not following through one way or the other. That often leads to a big trade in time. You're not there yet. You wait. The market needs to get over the 18-day average to say, uh-oh, we've gotten ourselves oversold, momentum's turning up, then the bias could be up, and you might even end up at that point with higher lows, higher highs. You're not there yet. The bears are still at this point in control, but barely. In the DAX, we were talking yesterday, this big rally. I said you're probably going to go to the 18-day average, and that's where the battle between that and the 100-day average will begin, a real battle, and you're there. That's the rally point. Obviously, this all ties together with the U.S. economy probably going to pick up, data going to pick up, and so on. A lot of people going back to work, paychecks going to be in the mail, assuming the House does its job and passes the bill. In the 10-year notes, we had been falling on this. Now, as you fall, real rates were going up. So the rally today was interesting, but all the cash markets were closed. It's Veterans Day. So I don't trust any of today's action. That's the futures players playing around. It's not the cash market, boys. You're still underneath the 18-day average, so the bias is down, but it's crystal clear. The market is trying to make a decision from the 100-day average in the green line. Which way do I go next? Also, you've got higher lows, higher highs, but you've got to close over that 18-day average to get everything pushing to the upside. Then you'll say interest rates look like they want to head lower. You're not there yet. The dollar, huge correction. I'm teasing you. I've been saying I thought it would have nothing but problems here. First at the combination, of the gray line, the 200-day average, and the Bollinger Band. I'm crystal clear. Go look. All the videos are out there. And you're getting it. And you're right back now to the 18-day average. Now the game starts. The momentum's turned down, but you haven't closed under the 18-day average. Are you going to get a downtrend? If you get a downtrend there, are you going to get an uptrend in the euro? Because 57% weighting of the index is the euro, and the euro rallied right to the 18-day average. Neither are giving us an indication yet what they want to do. I've been bearish the Japanese yen and remain so up until the red line here, which is at 12, closes over 21. Barring that, I see no reason you can't make a run to the lower band. Now, if you looked at the weekly chart, there's reasons, I think, to have taken a little bit of money off the table, but you'd have to be a subscriber, paid subscriber of mine, in order to see what that is and why I said that. Lower low, higher highs, just sort of hanging in here at the November Bitcoin. When we looked at the energies, all the energies had a real neat rally here. They've gone up. They're challenging upper moving averages. You can see that right now. Same thing going on in the WTI. You came up to the Bollinger Band. You're fighting that zone in the heating oil and in the nat gas. First, real cold weather of the year is the reason why. Market's looking for demand. Russian oil come very soon. The new sanctions kick in against it, and market is getting itself ready for that. A lot of people forget those things. I try not to. And where I bring them up to you all the time, that I can remember, sorry, that went out, is in the morning subscriber videos. And in those videos, I open up my charts. There's 40 of them in the morning that you'll look at with me. And that's where I'm saying, buy here, sell there. Here's the stop. Here's where I'm dead wrong. Oh, we were wrong, that market. We got stopped out. We were right. I told you to take half profit or X amount. We follow each trade, each individual one from beginning to end, and then that's the end of it. It's not about a track record. It's not about me managing your money, because I don't publish a track record. I manage 0 people's money, don't need to. I just want to call the charts and the action for you that I'm seeing and give you some logic with ideas. So that's the whole purpose of those. To get to them, go to iraepstein.com. The word is research. Can't miss it up there. There'll be icons up here. Give them a click. I'm Ira. You have yourself a great evening. I'll catch up with you tomorrow and, of course, in the other videos tonight. Take care.